What is good, guys? It's Rey-Jay back with another video, and in this one I'm going to break down what's going on with NIO stock in the overall market and talk about the bigger trend we're seeing on the technical level. Before I break down about all this information, let me just mention a couple of things. I'm firstly not a financial planner, so take none of this as financial advice, and don't forget about the Moomoo link. The offer ends very soon. Put in $100 and you're guaranteed 5 free stocks with a $100 cash reward. Anyways, let's talk about the market. What on earth is going on? So looking at SPY, this thing was down 0.71% for the day on Friday and managed to close below the 440 support level. Now, what I'm going to do now is talk about why 440 is very important, because we saw a lot of open interest on the options chain at that level. But what's interesting is after that happened, we're about to get another bearish cross on the 4-hour PPO, and if we continue to hold below 440, there's a good chance the market's going to start declining a bit. Now, let me first mention that it's not 100% confirmed just yet, because the market could always make an attempt to try to get back above 440. I'm going to use 440 as our trigger, because if the market gets back above 440 and holds it, we still have potential for more upside. If we fail to break and hold 440 for an extended period of time, we start breaking down more, then there's a higher probability of a lot more downside to come. Not just like a tiny amount, maybe like a more significant drop over the next week or so. And I'm going to break that down based off this news. So I think the market's going to be closed on Monday. There's not much going on because of Juneteenth and also because of Father's Day, which is going to be on Sunday. But for Tuesday, we have Bullard from the Fed speaking. And although she tends to be a little bit more dovish, she could easily slow the market down. Then we have Williams speaking again. We have some housing data and not a whole lot going on. Now let's also add to the fact that for Tuesday, we have Powell giving a testimony. So we have Jerome Powell speaking. We have Jefferson giving a testimony. We have Cook giving a testimony. So we have lots of Fed speakers again on Wednesday. Then we have Mester speaking on Wednesday. For Thursday, we have Waller speaking from the Fed. And today, when Waller spoke, the market slowed down, or at least on Friday. We have initial jobless claims. We have Bowman from the Fed. Mester again from the Fed. Once again, lots of Fed speakers for the week. Then we have Barkin after the market closes. And for Friday, we have Bostic and Bullard. Bostic tends to be more on the hawkish side. Mester again. All week long, Fed speaker after Fed speaker after Fed speaker, and even Jerome Powell himself is going to be speaking. This is going to be very important, and this does increase the odds of the market slowing down a bit, because we have lots of more hawkish Fed speakers like Bullard and Bostic, and Waller, who tends to be in the middle, speaking. This is going to be very important, so make sure you're ready for this, and this may cause a slowdown in the market going forward. Now, what's interesting is this happens to be correlated with us getting a bearish cross on the PPO on the 4-hour time frame. And also, let me break down something else on SPY. Zooming out on the 4-hour time frame, you can see that there is technically this bearish divergence that has been developing like right here. So basically, the RSI was around 82, 82.5 or so, and then the RSI reached about, it actually did not form it on the 4-hour, but on the 1-hour we have the bearish divergence I'm referring to. So zoom out of the chart and you can quite clearly see it right here. This does not mean the market has to crash or anything like that. All this means is the market may get a slowdown. So the RSI used to be around 86. I think I was referring to the 1-hour, not the 4-hour by mistake. On the 1-hour time frame, we had an 86 RSI. And then all of a sudden, the RSI reached a peak of 80. Then the RSI reached a peak of 76, 77. And then the RSI reached a peak of 76. But notice how the RSI technically has been downtrending for the last couple of weeks, when in reality, the price has been getting higher, right? The price used to be around 430 in the very beginning of June. Now we're at 439. So the market has been going up. RSI has been going down alongside the MACD. The MACD and the signal line used to be a lot higher than where they currently are. So it looks like we have a bearish divergence. Now, what's confirmation of the bearish divergence? A rejection and a move to the downside. What move to the downside is there? We got this rejection and a potential PPO crossover on Friday, but we're still holding above the 50 EMA. So if we break below this 439 level, there's a high probability the market's going to start downtrending. Cooling off, in a very healthy manner, a very healthy pullback is completely fine. I'm not saying it's a crash, just a healthy pullback. Now, what else you could do is look at the 4-hour, for example, maybe even the daily. I think the daily would work for this. Maybe the 4-hour time frame for this. Even when the market pumps, okay, when the market goes up, it does not go in a straight line. You guys see this? See how it went up from 409 to about this 422 area, came all the way down back to 416. It dropped quite a bit for pushing up to the next leg. 429 came all the way back down to 426, pushed all the way up to about 439, came all the way back down to 434 just temporarily when Powell was speaking, or right before Powell came on. We're back up to 443, then it came down to 439. So it could still be on a nice uptrend even if the market slows down. But here's the interesting thing. On the 4-hour time frame, okay, we were treating the 50 EMA as a support zone. You can see right here, we kind of like went a little below it before, but then as of recent, ever since we approached June, we hit the 200, we bounced up, hit the 50 a little bit, came a little bit below it, and then we just pushed right back up. Came right here, we touched it, pushed back up, and we've been hovering above it since. So it's very likely, in my opinion, that if the market is going to truly downtrend, we need confirmation through a hold below 440. If it holds below 440 and does not break above it, it's going to likely come all the way down to 433 sometime this trading week. So the trading week that's coming up. Why may that happen? Because of a lot of Fed speakers. We also have Jerome Powell speaking. So I'm going to be looking for a move down to 433 or even lower than that by Friday of next week. For Tesla, there's no real sign of true weakness just yet. I mean, the 4 hour is not really confirming it. Is there a bearish divergence? Let me just double check this. I've not seen confirmation of it. There's not truly a bearish divergence yet. I'm not really seeing confirmation of it from here. But at the same time on Tesla, it still is, it was holding up very nicely. It's still on this nice uptrend. There's no confirmation of Tesla breaking down. And if the market slows down, though, there's a high probability Tesla could start to do it. If that happens, you're going to be watching support at this 247 level right here. And if that fails, there could be a little bit more downside to come. Right? Tesla has a lot of gaps below like the 244 level, also around 235, but there just isn't confirmation of that happening yet, so I'm not too fixated on the downside just yet. But for NIO, what does this mean for the bigger trend? So I'm not just talking about tomorrow specifically. I'm not just talking about, like Tuesday or whatever. I'm just going to talk about the bigger trend. For NIO, what tends to happen is when you look at the PPO, hopefully this isn't too small. When we get these bearish crossovers, NIO either starts to chop around a bit and then slows down. When we get the bullish crossovers, such as like this move right here, and a really nice pump from the $7 level all the way up to almost $9. And then right here, we got a bearish cross in the PPO. And this had a lot stronger amounts of momentum, which led NIO to going from the $9 area all the way down into the 7s. So you can see how strong this was. The initial drop was into the 7.5, going all the way down to $7. Then NIO got a bullish cross on the PPO, started trading sideways for a while, chopping back and forth and getting ready for a massive move. The move came to the upside, and we got another bullish cross on the PPO, and NIO started pushing very hard. Now, NIO just got a bearish cross on the PPO, which suggests that NIO could come down to some balance down here and potentially back into the 8s very soon. Now, if it does end up doing this, I'm going to be watching how it responds to $9 if it does come down there, and then see if it forms like a right shoulder, because this is starting to look like a head and shoulders to me. Like if you look at the 1 hour time frame, we could kind of see it on the bigger time frame right here. So we have this support right here at the 50. If it breaks the 50, the next major level is going to be the $9 area. Then we have the 200 EMA after that. But basically, we could be forming a head here, right? This could be a giant head. And we had this like left shoulder here. So it could be forming another right shoulder and then potentially come all the way back down to many of these imbalance levels. Now, does it have to crash all the way back down to the 7s? Not necessarily, but there is potential for it to come down even more from here. I'm also saying this because we formed a bearish divergence technically. The RSI was at 84 and it started declining, and NIO actually got one more pop to its high at 10.21. Also, you could argue that NIO's RSI was a little stronger right here before coming down. And simultaneously, I'm not seeing it on the MACD, but it is starting to show signs of weakness. If NIO breaks below the 50, that's going to be a confirmation, and it's very likely that we may see the whole market decline. The market may decline maybe because of the Fed speakers. A lot of these Fed members tend to be hawkish, and a lot of them are still fixated on 2 more rate hikes, as crazy as that may sound. These Fed speakers may slow down the markets, and if they slow down the markets, this may cause NIO to cool off as well. If that's the case, It is what it is. It's just a temporary pullback. It's not the end of the world. And then after that, we're going to be getting very close to July, and then we're going to be entering the next earnings cycle. And that's going to be very huge for the whole market. So please be ready. We're just a few weeks away from the next earnings cycle. And if we get decent earnings, the market could hold up. If earnings aren't that great, then that could slow things down even more. But I'm going to be optimistic and see how it goes. For now, just be patient and just be well aware of these warnings I have for all of you. All right, so thank you for listening. Have an absolutely spectacular rest of the day. Market to the moon as the long term is very bright, and peace